Good morning, everybody. How are we all doing? Morning, Evil, Danny, Church, Amy, Knut. Morning, Nut. Gregors, George, Neo, Vitali. How are we doing? How's everybody doing this lovely good news for the pound morning? Typical. So CPI came out this morning for the pound, and as I suspected, we didn't get that 1.9, we got the 2. So bullish pound, not massively bullish pound, but still bullish pound. So I thought that was a bit of a stretch. Never know though. So yeah, that came out at 7 o'clock this morning. So CPI unchanged for the pound, which means it is less likely for an interest rate drop, but still not off the cards for August. So we'll wait and see what happens. So as you can see, pound has had a bit of a rally this morning. Not big though. You can see from the ADRs, none of the pound pairs have hit ADR. Pound New Zealand has, but that's because of the New Zealand news, not because of the pound news. So there's no real big movement there. We're kind of half an ADR. That's it. So it's not dramatic. I wasn't expecting a massive move to the upside if we did get it. I was expecting a massive move to the downside if we did get the 1.9. But the market's been rallying for days and days and days into this number. So it's still, I think, due a drop. But we'll see what happens with it. But so, yeah, that's the news this morning. Pound CPI is unchanged. Morning, Bogdan. Other news today, building permits, industrial production, and we got Waller speaking later. So nothing else really today that's going to move the market. Waller might, if he says something, but Waller. Yeah. But we'll see what happens with that one. So that's kind of the day's red news out the way. I just want to cover the news from yesterday. So I'm just adjusting trade over here. I just want to cover the news from yesterday. Just going back to yesterday afternoon and the CPI numbers for Canada. Obviously, the Canadian numbers all came out ever so slightly down apart from the trimmed CPI. So the chances of a cut now in the Canadian interest rate are up to 90%. It was highly, highly likely they were going to do one anyway, but now it's kind of 90% that we're going to get that rate cut. So that is even more bearish for that Canadian dollar. More importantly, yesterday afternoon, we had the Fed rate cut factored in for September at 100%. So we had Kugler coming out, basically saying it all seems to be moving in the right direction, although the fundamentals are, we're at 3%. We're coming down 0.3. So as long as that continues, yes, we are in the right direction. But the thing with obviously forecasts is they change on a regular basis. So disinflation is back on track. So they're basically saying it looks like it's going the right way. There's a good chance that we're going to get that rate cut in September. So we're now looking July for New Zealand, July for Canada, September for the US. The New Zealanders, we scroll forward to the CPI and everything that's happened this morning. Rate cut in August, chances falling away to 25% for the pound, but the New Zealand, where'd it go? CPI was ever so slightly down. So you can see the New Zealand dollar had a big rally off the back of that. The New Zealand's got no real indication as to what it's doing with interest rates. So again, bizarre reaction. Yeah, CPI numbers coming down, more chance of interest rates dropping, bearish for the currency. So it goes the opposite direction. Yeah. So we don't change interest rates. Thing collapses. We get news that interest rates can change. Thing pumps. Utterly ridiculous, isn't it? It's just absolutely no reason for this. This number was a 0.4 negative. We were at a 0.6. We thought we were getting a 0.5. We actually got even better inflation drop. That's much more likely we're going to drop interest rates. So that it pumps the opposite direction. But, this thing at the moment, I'm coming to the conclusion that at the minute, with what's going on with interest rates and everything, the market hasn't got a clue. So it just basically isn't paying any attention to any of it. It's just not doing what it should be doing on fundamentals anymore. Yeah. So interest rates, inflation, bearish. That should not be bullish. So don't think this is a move that is going to hold. I think this is just a little profit take move off the back of that, and we're going to drop again. So any profits you've got on this New Zealand dollar move, I'd be careful with them. I'm just going to protect that one that I've got in play there. New Zealand US. It doesn't make sense for this thing to be rallying off the back of a negative interest rate inflation drop. So that's the overnight news. That one, very good. You can see from the Aussie New Zealand, we got some massive movement off that one. We got a 150 ADR on that. Again, look, New Zealand dollar pumping 150 ADR on a negative number. Just nonsensical, isn't it? In exactly the same way as that was nonsensical. Interest rates not changing. There's absolutely no need to do that when the interest rates are not changing. Yeah. Market is just, I think what's happening, is the market is doing what it normally does. The banks and institutions are factoring in movement 2 to 3 weeks or 4 weeks ahead of the news coming out. They're just factoring it in wrong all the time at the moment. They're getting it wrong because the banks and institutions are so woolly, or the central banks are just so woolly about numbers. We've had 3 changes on the Fed rate this month. Yeah, they've said 2024, July, and now September. Now it's 100% guaranteed September. Next week, it might be 50% for September, and they're looking at next year again. It changes every single week at the moment. So I think the banks are just finding it very hard to pick a directional bias on anything, which is why we're getting these crazy movements where they're just going, we didn't get that. And they just basically dump the position that they're in. So the directional bias of these news events at the moment doesn't really mean anything, I don't think. And it's a prime example this morning for the New Zealand dollar. You do not pump an instrument on negative inflation. It just doesn't happen. Well, it does happen. It is happening. But this is because Bank of New Zealand haven't told us anything about interest rate change. So the market is like, okay, we weren't getting information on the interest rates there. They didn't say anything. So let's get out just in case. Let's get in just in case. It's all just speculative just in case, isn't it? But thing with the banks is obviously they can move it where they want. So it doesn't matter which direction they take it, because if they want it to go higher, they'll make it go higher. We don't have that luxury. So trying to read fundamentals at the moment, very, very, very difficult. But we've got some decent movement across the board on the New Zealand today. No reason why it should stick. As I say, this move here, I was fully expecting to be undone. Kind of looks like they're doing it now, doesn't it? So pushes back into propulsion on the Aussie New Zealand. But we hit 150 ADR today at these lows. So obviously they've brought that back up again. But we might get another leg. But it's going to take a hell of a lot of movement to get down there, especially now the Asian session's shut. But Aussie New Zealand 150 ADR, if you did take that reversal this morning, it was a very easy one. So your reversal alert, you can't even see it. It was so small. Reversal alert was down there this morning at 150 ADR. And it's pushed up good half an ADR out of that, easy. Euro New Zealand has also hit. So all the ADRs today are New Zealand dollar based, obviously. So all off of this whipsaw, basically. So big push down, bouncing back up again. But again, Euro bias is short. New Zealand bias you would expect to be long because they're not changing interest rates. So this should be coming down. Shouldn't be doing that. It has for a good week. So good chance that we'll undo that and come all the way back down into the propulsion move. Pound New Zealand, same. This is the one that I'm in at the moment. This pound, with the news today of inflation, and it seems to me like the banks knew about this. it's difficult to tell what we're going to see out of the pound now, because if they're now talking about 25% chance of a rate cut in August, where we thought it might have been July, we're now going back to where? September, October, November. Are we having a rate cut this year? Again, Bank of England acting very much like the Fed. No idea. They haven't got a clue. They say one thing, they do the other. If we hit 2% interest inflation, we will drop interest rates. We've hit 2% inflation. Actually, it was a little bit what we didn't like. Yeah. You can't trust anything the banks say at the moment. So I think there's a very good chance we're going to get a pullback on this. Now we've got a little bit of strength for some unknown reason coming into the New Zealand dollar, but we've also got strength now coming into the pound potentially. So we'll see what happens today. We need to give the market a few hours to bed this information in. Yeah, but I'm just hemorrhaging drawdown control on these pounds at the moment because it's just unrelenting. It's just not stopping. But squeezes and squeezes, just getting a lot of them at the moment, aren't we? New Zealand dollar CAD. So it's completely sideways on this one at the moment. That is an ADR hit to the upside. Again, we've had that little bit of a pullback, but for some reason the market wants to pump on the negative inflation numbers. So could well continue to rally today. You've also got New Zealand dollar Swiss extended to the downside. Big pump going on there. And New Zealand yen and New Zealand US. Obviously, they've all hit ADR, but that one's an A-shaped recovery. Looks like we've got some strength coming into the end this morning. We have. So more strength coming into that Japanese yen this morning. Good movement there. Again, probably people pulling money out of all the other currencies going, what the hell? Sticking it into the yen. Nowhere else to put it, have we? But yeah, so the good moves on the yen this morning. So this intervention at the moment looks like it's going to hold. If we get a break of this low today and getting hit beyond ADR today, I would say they're going to make this one stick, wouldn't you? It's good, didn't it? So potentially some strength coming into the end finally after I don't know how many months stroke years, finally getting a bit of strength coming in. So if this intervention holds as that one did at the 150 level, that's what you would be expecting to see. Yeah. So looking at a move down, probably back into 150 as a minimum, if not coming back down to that 140 level. So good moves to the downside there, but obviously you want to try and get in on a pullback if you can. Didn't really get one, did we, before the second move went in, literally the next day. So not had a pullback much on that move yet. So those are your ADRs today. RSIs, there's not a lot to look at on the RSI side of things. Aussie yen is extended to the downside. You probably find it's all, oh no, it's just Oz and CAD at the moment. So you got Euro odd on the 4 hour. Extended to the upside still. Got shorts on this one already. I've got 2 positions on this one. I'm just looking for a pullback on that leg. Again, Australian dollar bullish, Aussie dollar, Aussie dollar bullish, Euro bearish. Euro CAD, again, still extended, 5 on that one at the moment. Had to do some DD control on that one over the last week. I've got an aggressive drawdown control position on this one at the moment. So hoping we don't get this high invalidated today. We didn't manage to get the reverse alert on the 4 hour this week. So looking for a pullback on that one. Pound odd, very much the same. So Euro odd and pound odd, same thing. But the pound obviously today has had that massive move. Well, it's not a massive move, but the move started to the upside. So again, stopping out of the aggressive drawdown control position. Yeah, a little bit more drawdown control on that one. So yeah, just stuck in these pounds at the minute. They just won't stop. Crazy moves. Morning, James. Morning, Steve. My plan was this morning to go through all the pairs, but there's not really an awful lot changed this week so far. So the CPI for the CAD has reaffirmed the short position. The New Zealand doesn't really change that because all they're doing is they're undoing the wrong move that they put in on the interest rate change. That one is the one that really is the fly in the ointment at the moment, because it means that we've got less bearish intent on the pound. So the pound potentially is going to start to range a little more while we're waiting for some confirmation from Bailey. And again, Bailey has said nothing. We've had nothing from Bailey at all about anything. So really being let down by the Bank of England at the moment, not giving us any information or forward guidance on what they're doing with inflation or what they're doing with interest rates. So as far as we were concerned, we were expecting a drop at 2%. We didn't get it in July. Now it looks like we're not getting it in August. So what are we getting, Bailey? Give us some information. Nothing's coming out. So probably going to hold in a range. So these pound pairs, pound odd, for example, you've got the double monthly high coming up. So we'll probably get a reaction if we get an ADR hit today off the back of this news. Pound CAD, we're out the highs on this one. Canadian dollar weakening further on the CPI numbers. Pound strengthening further potentially. So this thing could continue to go from a fundamental perspective. But like I said this morning when I first came on, market doesn't seem to be paying attention to fundamentals at the moment, does it? Pound Swiss, so again, range bound on that one. Swiss franc weak. I suspect they're going to drop interest rates again because of the inflation figure coming down again. So with that pound strength, if we get more Swiss weakness, potentially a move up there. But we have got the double top coming up. So we are forming a range here at the moment. So potentially nice big pullback coming off of that. Even if it does continue to the upside, it needs a bit of a rest for the next couple of weeks. Pound yen we know about. So yen intervention seems to be holding at the moment. Pound New Zealand. So that's come down very nicely. Again, I've got an aggressive drawdown control position on this one. Still targeting this move here. I do not think that is the right move for the New Zealand dollar. We need Bailey to give us some indication of when we are going to drop interest rates. Even if he comes out and says something as mediocre as we will do it this year at some point, at least we've got an idea that, yes, we're going to get some weakness starting to come into this pound. But at the moment, radio silence. So acting very much like the Swiss. And the pound US, obviously, with the US dollar at the moment, we're getting a rate cut in September now. So that is bearish US. However, November, we've got the elections coming up. So there is a possibility that we're going to get I just done a DD control on that. Really? You just spread me up to there on that candle. What can you do, brokers? So yeah, so pound, obviously, there's a potential now for this to rally. If we're going to get that rate cut in the US in September, the US is bearish. The pound at the moment, we just had the inflation figure not tick up, but remain where it is instead of ticking down. Although I'm not sure how much of the market was actually expecting to get a 1.9. But anyway, but we got a beautiful weekly high here, which held on Monday. We're retesting that area again now. If that fails, we may well get that correction started back into the propulsion on that one as well. So all the pound pairs, just need to watch them today. If you're using the Position Trader EA or the Market Reverse Alerts EA, and you've got DD control on, as you can see, it's being done for you automatically anyway. But yeah, totally relentless at the moment, the pound. Absolutely no let up at the minute. Aussie yen, we just got an ADR hit on that. So that's the first yen ADR of the day. CAD yen is still coming down. So yeah, really good strong move on the yen this morning. So all of these yens, watch these breaks. So if we get these breakouts today from these lows, so obviously that's the intervention. Market got exhausted, brought it back up again, brought it back up again, brought it back up again, brought it back up again. But the Japanese are keeping going at this one. So hopefully if we get that low broken, that will start the market structure to the downside. So you'll be looking for shorts on these yen pairs moving forward. How far they're going to go down, though, before they stabilise, we'll have to wait and see. Morning, everybody else. Chucks, Virginia, Dev, James, I've already said, I think. And this week, there are a few more news that could further pump or hopefully dump the pound. So, yeah, I mean, we've got the claimant count this week, which doesn't really do an awful lot. Retail sales is very hit and miss. We do get massive moves off retail sometimes. If you look at the US dollar yesterday, for example. So we had the retail sales for the US come out yesterday. It was quite a big positive, to be fair. So obviously we got a nice big pump on the retail numbers. Probably better to look at Euro US. So yeah, there's your pump on the retail numbers. But retail is a reactionary indicator rather than a leading indicator. So the retail sales will either pump or dump based on people's spare capital, which is, again, interest rate and inflation driven. So it tells us, it confirms really what we are expecting. People are poorer, they are spending less, retail's down. So it's a confirmation indicator really for the institutions to say, yeah, things are still going as we thought. Therefore, this is the likelihood of interest rate change. So it's something that tends to get movement, but doesn't start a move, if you see what I mean. So, but, you know, if you get multiple days in a row with news in one direction, that is enough to kickstart a move. So if the CPI number pumps, retail pumps, something else happens which gives a positive number, you know, that it will take off. So there is a good chance that, you know, this number, don't forget, it's green, but it's not green, it's the same. Yeah. So we were forecasting a slight drop in inflation. We didn't get it. We haven't gone up though. So, you know, it's not something that the Bank of England is going to go, oh, we need to put interest rates up. It's not going to be massively bullish. So if we get negative numbers there on the claimant counts and retail sales, it's 2.9 expected to drop to a 0.6 negative. Yeah, so it's going down 3.5% drop in retail sales. It's going to take a hell of a lot to that to be a red number, isn't it? You're going to have to drop more than 3.5% month on month in retail. Yeah, this is July, May to June figures we're looking at here. So it's unlikely it's going to drop by that much. In fact, it's unlikely it's going to drop that much. It would probably more likely be positive. But if you get a negative there and a negative there, the market will see that as a confirmation of things going badly, which means inflation might tick up. So you might get a bullish move off of it. Because I mean, with these numbers, when they come out, the green and the red is what everybody wants to pay attention to. Oh, it's a red number. Red number means that result on its own, yes, is different to what was forecast, but that doesn't necessarily mean in the massive machine with all the cogs moving that it is actually something that's going to have a negative impact. It could have a positive impact. So you can't just go the direction of the colour. It doesn't work that way, as we know. As you can see from the New Zealand today, yeah, it's a negative number. It's red news. It's 150 ADR up. Yeah, doesn't work that way at all. But obviously you get lots of knee-jerk reactions when the news comes out, which is just them using the news to take profit on positions. Doesn't mean it's going the way that it's gone on the news as a continuation. It could just be a pullback on a leg where they're going to add in more shorts. So just have to wait and see. But again, total confusion from the market this morning. You know, just getting mixed messages constantly, aren't we, from banks? So we'll have to wait and see what happens. Euro this week as well. We've got the rates coming out tomorrow afternoon at 1:15. So the main news, obviously, we've got unemployment for Australia as well tomorrow morning. So it could be a big move on the Aussie in the morning. But that's the big one, the 4.25. And again, we've been told by Lagarde that there is a very, very, very high probability that we will get the 4.25 because we've just had a drop and inflation hasn't quite done what we wanted to. So there's absolutely no reason to do that. Now, ECB are actually one of the ones that do usually do what they say. So hopefully we will get the 4.25 tomorrow. But the press conference is what we're going to be interested in tomorrow afternoon, having a look at what's going on with the euro. And what we want to know is, are you going to drop it in September? Yeah. Oh, no, sorry, in August. So we've said June, yes. July, no. August, yes. That's the current plan from the ECB. So a confirmation of that plan means we should see more bearish movement coming into the euro over the next 3 to 4 weeks. So all these euro pairs, euro yen ADR as well, look. Big yen move coming in. So all these euro pairs, again, that are pushing, a little bit like the pound, Lagarde should, hopefully, if the plan stays the same, be confirming that we will be dropping interest rates on the euro. So all these pullbacks that we're seeing at the moment should start to peter out. So we're looking for that next leg down, same as this. So the price action is the same, look. We're looking for a new leg down. So as long as interest rate change is going to continue, that's what we should be seeing. But again, look what we're getting at the moment. We're not getting market structure. We're getting that. Yeah, we're used to that. Not happening at the moment, is it? Markets, the structure of the market at the moment is very, very different to what it was on the way up with interest rates. So again, Euro CAD got a beautiful monthly high coming up. Got shorts on this at the moment. I mean, I've taken some drawdown control this month, so I think I'm going to have to hold a lot of these positions a little bit longer than I normally would to try and get back basically to a break-even month this month. Euro Swiss, that's a lovely 50% retracement. So again, tomorrow Lagarde could start next leg down on that one. Swiss franc is weak though, and is still weakening. So of all the pairs out there, the Euro Swiss is probably the one that is going to be less likely to continually break those lows, because obviously the stance is bearish against bearish, which is more range-bound activity. But you can see this isn't playing ball. It's the Swiss franc, does what the hell it likes. ECB against the pound, US dollar yen ADR. So more money coming into the yen again today on the US. So yeah, again, obviously this has dropped down basically because we've had slight bull move. The stance is bearish at the moment, and it should be switching to a neutral stance because we should be doing that on the pound. Again, Bailey's not said anything. So got some longs on that one at the moment, looking for a pullback up into the 24. Yeah, so just looking for that pullback up into the 24 for the next leg down, which it should be a next leg down. Euro New Zealand, again, we've just had that move on the New Zealand dollar, which has already started to undo this one. Beautiful extension. Again, we were talking yesterday about the 14 RSI 80 level and how reliable it is. Yeah, so that move started to kick off there. Yeah, so good move already started on that one. But again, this move that started here is on fundamentals in the opposite direction it should be going. Yeah, New Zealand dollars just had news this morning that their inflation figure has come down, which weakens the New Zealand dollar, which means the euro should push against the New Zealand dollar. Again, totally opposite to the news at the moment. Market is not playing the way it usually does. And Euro US dollar. So I've got shorts on this one, holding at the moment. I'm going to just extend my targets on this quite a bit. There's no way I'm going to hit these targets. I'm just moving them out of the way for the moment because it's only 125 ADR down into this current high that we've got here. So if that propulsion gap holds, it's obviously just going to pop back out of there. If that propulsion gap doesn't hold, we're going to come and test this level. So I'll see what the P&L is like when we get down to these levels. But, you know, at the moment, the euro obviously pumping. Is that a 125? Aussie yen 125, Swiss yen ADR. There we go. So we've broken the low on the US yen. Pound yen is testing. Euro yen is testing. Swiss yen testing. So they're all testing these lows again. CAD yen already gone. And so is the Aussie yen, obviously. That's collapsed. Yeah, big moves. So yeah, weakness in the US dollar coming in this morning. US weakness. Yeah, so more weakness in the US dollar this morning. Where was I? Euro US, wasn't it? So yeah, there's a good chance I think we're going to get down to here. But that rate cut, so what's going to happen with the euro tomorrow is Lagarde is either going to say, yes, we are doing one in August, in which case we've got bearish movement required via the euro. September now for the US dollar. So we've got a month's delay until we'll probably start selling that US dollar off, which gives this time to move down. So the equivalent of that move potentially back down again before we start getting some weakness in the US dollar. So the question then will be, what's the strength difference between the euro and the US dollar? Because they will both become bearish. So again, you should be seeing very much the same as we've had. Yeah, a bear against a bear. We've had a bull against a bull sideways. Now we've got a bear against a bear. Should really carry on the same, but it all depends what happens with Trump in November, and elections are going to throw the US dollar into potentially a massive strong movement, because when Trump gets in, the economy does well. When the economy does well, the currency strengthens. So this thing could start to come down as it did before, like that. Yeah, so distinct possibility of that happening again, but we will see what happens. So yeah, so I've not really got anything else to cover today because it's all a bit up in the air at the moment. We need to see what happens with these pound moves today. See if they decide they do want to continue rallying it or not. So yeah, tomorrow, 3 big news events tomorrow. Actually 4, because you've got the unemployment claims for the US coming in as well. So big news day tomorrow. Everything that we're seeing squeezing at the moment could all be undone very, very easily. We wait for these paydays to come along regularly, and it's not unusual to bank a 5 to 10% day in position trading when you get big news days and everything starts to move in your direction. At the moment, we've got squeezes happening. Everything's getting squeezed. And it can all get undone in the same day, which is why we try to keep our average within that ADR, 1.5 ADR range, so that when we get the payday, you've got the opportunities to bank the cash. But at the moment, it's just squeezing. Everything is just squeezing really hard. So tough market at the minute. Aussie New Zealand finally starts to drop. Yep. So I wouldn't. This move on the Aussie New Zealand obviously is based off this New Zealand dollar news this morning, which should be the opposite direction. But then again, that should have been the opposite direction. In fact, that shouldn't have been directional at all because it wasn't a change. But that interest rate change, I said when we got that interest rate change, I reckon we'll be back down and undo that, because there's no reason for that one. And if you look at where we are, it looks to me like a false breakout. So you can't really see it on this chart as easily as you can on the daily. Yeah, but this is the old range high. This is your range low. Yeah, so we've got this area here and this area here. It's absolutely exhausted. As you can see, the daily 80. We don't get there. It's incredibly rare to get a daily 80. It was there actually. When you're that extended and that far away from the 72 moving average, something's got to give. So this to me looks like it's an attempt at a false breakout. But even if they break out of that level as they have there, there's nobody left to sell. So it's got to pull back into that range to even gather momentum to try and attempt that high. So this is the start of that pullback. They're using the news to do it. We've got further news coming on unemployment rates. If those unemployment rates go up in Australia tomorrow, in theory, if you study fundamentals and economics, the Australian dollar will weaken. But then again, today, the New Zealand dollar should have weakened, and it didn't. It pumped. So, but yeah, if we get a red number unemployment goes up above 4.1 tomorrow for the Aussie, you'll be back down at that 24 moving average potentially by the end of the week. Yeah. So remember the climbing up the stairs and falling down the elevator shaft. Yeah, that took 3 weeks to get there. It took 1 week to get out. That's what it does. It takes weeks. It always takes half as long, at least, at the most, half as long to get out of a bull run when it comes back down again. Yeah, you flush. You go bang, bang, bang. Because it's a panic sale. It's a profit take. Yeah, your P&L has been rising and rising and rising for weeks on end. And now you're seeing that beautiful P&L you're planning to spend collapse and disappear. So you get out of your positions. If you've been buying to get out of your positions, you become a seller. You add to that momentum and that collapse starts and moves much, much, much faster. Think we could get an A-shaped recovery on the Aussie New Zealand? Yeah, I think we could come back down and retest the range lows. Don't forget the fundamentals on this are both bull. Yeah, which is why we're getting this range. There's no advantage to being long or short on either of these at the moment. The Australian economy will always win out, though, when there is a differential, because it's always stronger. It's a bigger economy. It's just much bigger. That is where the interest rates changed last time to be differential for shorts. At the moment, there is no differential. Yeah, they're not changing interest rates. They're not changing interest rates. They haven't said when they're going to do it, but they've both said that they might have to put them up. So there is no bias, which is why I think this is a false breakout. And I think we'll probably come all the way back down again. But look at market structure. Yeah. And assume the worst. Always assume worst case scenario. You can only be pleasantly surprised. We've got a low, we've got a high, we've got a higher low, we've got a higher high. Assume we're going to get a higher low. So we're going to come and test the 72 moving average, and we're going to bounce from that the next quarter. So worst case scenario. Yeah. But you just can't tell. Market structure works when market structure works. It's the same as everything in trading, isn't it? It all works well when it works. It doesn't work when it doesn't work. There's nothing you can do about it, and there's no way you can tell whether it will or won't work. You can look at history, and history will tell you what's been happening, but that's history. It's got nothing to do with the future. So you can only forecast and extrapolate, and that's what it's all about. It's about planning. So if I get in short here, I'm going to plan for it to come and test 72. If that doesn't work out, I'm going to plan to add a second position here, and I'm going to need to scale in all the way up to there. So the plan is, how much drawdown am I going to take going up there? You're not going to hold it that long, because if it tries to go parabolic to that level, it's just not going to get there. Look at it. It's got to pull back. How far the pullback is, though, don't know. This is the unknown, isn't it? Yeah, it doesn't matter how much. This is why Elliott Wave fails. This is why, in theory, Elliott Wave looks great, and you can pick many examples of when it works very, very well. But it only works well if the market conditions allow it to work. Same as everything else, isn't it? So yes, it's looking like it's going short. I'd be worried about that level there, and I'd be worried about that level there. These two propulsion gaps. Yeah, this is a large long bank order. This is a large long bank order. If they're going to continue that position, that's where they're going to add. If they're going to continue that position, that's where they're going to add. If it's going to come down, it's going to test that, or it's going to test that. If the fundamentals shift on its way to those two, by the time we get there, we could come and test the monthly low and stay in the range. Those are the things that I think will happen. I have no idea if they will or which one will, but that's the plan. All you can do, plan. Where you hear everybody saying, plan the trade and trade the plan. Yeah, that's the plan. What they don't do is adjust the plan, which is where these systems and strategies that you get taught in courses go wrong. Because yes, you can plan something, but if the plan fails 10 times in a row, you lose 10 times in a row. We can adjust our plan. That's the difference. The price that we get in at, we can change it. So that's what I think will probably happen with this one moving forward. But we're going to need that to come out above 4.1 or at 4.1. 4.1 is negative because it's gone up. 4.2 is worse than we thought. Much more negative. Yeah. When the this is why we have the unemployment numbers on here. Yeah, and why these differentials are important. So when unemployment goes up too much, the central banks are under pressure to reduce interest rates. Yeah, because it's basically the feeder. These two are the feeders into this. That going up causes that to go up. That going up causes that to go down. Yeah, so the ideal scenario for an interest rate drop is for inflation to reduce and unemployment to rise. That puts double the pressure on that. Yeah, so Aussie have said that we're at 3.6. It's not quite where we want it to be. It's coming down nicely, which means that, yes, there is a good chance that we will reduce that. But if it doesn't do that next time, we may have to increase it. This is forecast to go up, which means there's more pressure on that. So at the moment, inflation indicators are pointing at an interest rate drop. Unemployment tomorrow, if it goes up, will also point at an interest rate drop. That will drop the Australian dollar. The New Zealand dollar has just rallied off of its inflation drop. Yeah. Total mayhem. It's just everything is in confusion at the moment. Nothing is working, and every week we're changing our stance on everything because the figures are all over the place. Normally we have stuff that just does that and we're like, yeah. At the moment it's just everything feels like it's that at the minute. And this is why, you know, they think people like the Bank of England have come out and said, as soon as we hit that, we'll drop the interest rates. And then they go, actually, there's one part of it. And it's like, well, you didn't mention the one part of it. What you should have said is, if inflation hits 2% and services inflation has come down and not gone up, we will drop the interest rates. You didn't say that. So the market's been factoring in a drop on the pound. Now it's rallying like crazy because you changed your bloody mind about it, Bank of England, or rather you didn't disclose everything. So, you know, everything you see is going to change on a dime at the moment, which means it's just very, very difficult to use fundamentals to pick directional bias. Technicals are out the window anyway, apart from support and resistance levels, which we know. So the ranges that we're in, we're going to get those reactions at those levels. Smash the like button, as Mumo said. Good man. Haven't had John. I keep forgetting to put John up. Morning, Ross Wheather. You think we could get an A-shaped recovery in the... I'll just answer that one, haven't I? Yeah. We shall see. We shall see. At the moment, though, the market seems much more interested in this yen. So watch all these levels today. You know, there's a good chance we've bought this now multiple times. There's a good chance that this could well be brought back up again, but we'll see. Does seem very heavy today, but look. Holding at the moment, isn't it? I don't think there's a chance that we're going to get back up here again, but you never know. You just don't know at the moment with this market what's going on. But they're certainly struggling, aren't they, to get this down again. Movement is very odd on this yen. Very odd. Worst possible market behavior for RSI2. RSI2 is an intraday strategy, so yeah, I mean squeezes obviously. Squeezes are bad for any. It doesn't matter whether you're using a stop loss or not using a stop loss. If you're trading mean reversion, a squeeze doesn't. You know, there is no mean reversion strategy that works in a squeeze. If the market puts in multiple up days in a row, yeah, I don't care who you are, what you're trading. If you're a mean reversion trader, you're not making money. That's it. Yeah. Mean reversion does not work in a parabolic trend. It works in a trend, no problem. But it doesn't work in a parabolic trend. Yeah. So RSI2, doesn't matter what it is. If it's using any kind of oscillator, so if there's a strategy that you've ever learned in the past that has ever used an oscillator, it's not working. Because oscillators are designed to identify extreme conditions for mean reversion strategy. They don't work. Just nothing you can do about it. If we knew a parabolic squeeze was going to happen, we would become breakout traders. If we had that crystal ball that told us every time there was a breakout, we would obviously do that, wouldn't we? This is why trading is so hard, because there's no market condition that is stable for a prolonged period of time. Look at this. Yeah, that market there, that rounding bottom. You go and find a load of strategies that play a rounding bottom strategy. They've all killed it there. But every other strategy's failed. But how many rounding bottom strategies are there? Because they don't appear very often. It's just, there is no condition that you can run the same strategy in all the time. Or if you do, obviously, it's going to fail. That's where your stagnation periods come in. I'll be doing the bootcamp today. Good man. Today, in one day, you're going to do the whole lot in one day. Yeah, I suppose you'd be finished by the time you go to bed. Maybe. I would never have held the yen that long if I had. The profit would have been crazy. Why am I so much more comfortable holding DD than holding profit? Because you're programmed that way. That's why you're programmed. Human beings are programmed to have your joy receptors stimulated as much as possible and have your pain receptors stimulated as little as possible. So when something goes into drawdown, your joy receptors are going, we're going to make money on this. And when something goes into profit, your joy receptors are going, we've made money on this. You've got to take it. Otherwise, it might turn into a pain receptor. That's human psychology. This is the part that everybody in trading tries to change. Reprogram yourself to not have pleasure receptors and have pain receptors. There's not many people out there, apart from maybe Deadpool, that are like that. He doesn't mind having his arm blown off. Doesn't care. It grows back. Yeah, but that's not human nature. Yeah, this is why people want to hold on to their losing trades, because they have hope. Yeah, hope doesn't pay the bills. You have to get out of your positions. Drawdown control is absolutely critical. Holding your positions, very, very hard to do, because what's also happened to your psychology during a period of drawdown is that you have been punched and punched and punched and punched and punched, and what you want is the punching to stop. So as soon as you get back to a little bit of profit, you go, I can stop the punching happening, because you're worried about that. But the odds at that point are exactly the same as when you took the trade initially. It will either go back against you or it will go in your favor. And if it goes in your favor, that's your payday. That's why I've just moved all my targets down. Yeah, I've been punched a lot this month. Yeah, I need to get paid. And I need to get paid more than normal. And the fundamentals on this, I'm hoping Lagarde will confirm tomorrow, which will start this on that type of movement. Yeah, this is, you know this thing I keep saying about looking left. It works both ways. If you're in a position like I am here with 4 trades on, yeah, look at what happened there. Look at what happened there. Why would you take profit there? When the last 2 times in an uptrend, this market has shown you a pullback of that size, why would you assume this time it's not going to happen? Assuming anything makes an arse of you and me. Should never assume anything. Just deal with what you see, because you can't, the hope thing in the head, yeah, the market doesn't know anything about it. The market is going to move up and down in the same way it's moved up and down in the past. Yeah. After a big, strong push comes a big, strong pullback, a big, strong push, a big, strong pullback. No matter how many times I'd paint on the chart a drop that had a 50% retracement, a pump that had a 50% retracement, 100% retracement, a 50% retracement, a 50% retracement, 100% retracement, 70% retracement. Why would you not get a 50% retracement? That's your target. But I can guarantee you when you get down to there, you'll panic. It's human nature. If you don't look at your P&L, if you never looked at your P&L and you only looked at your chart, there is absolutely no way after seeing what I've just shown you on this chart now, you would go, I've got to take top profit here. But when you look at your P&L, mine will say something like $1,500 at that point. That's what makes me take the trade off. If I didn't look at the P&L, I would go, well, it's obviously coming back down to here, isn't it? Or worst case scenario, it's going to do a 50% retracement on that. And if we're lucky, we'll get a 61.8. If we're unlucky, we'll get a 38. That's why you take it off, because the worst case scenario is the one you always concentrate on, because you've been punched multiple times on the way to the trade. There's little you can do about that. Yeah. All these books on psychology, these courses on psychology will teach you and tell you what your problems are. There isn't one that gives you a solution. Yeah, the solution is don't look at your P&L. That is the solution. That's the only way you're ever going to get rid of the reason you get out of trades too early. The reason you get out is because you see money there. When I see $1,500 in my P&L, my brain is going, there's your mortgage. Yeah, when I see $600, there's your car payment. Yeah, that's the reason I take the money, because I need to spend it on bills. If you didn't have the bill spending, you'd hold it and you'd probably hit it. I've said it in here before again. One of my mentors told me to shut the charts when you took a trade. This was a stop loss based strategy using the shadow. And basically he said, you know, when you get into a trade, you enter the trade, you plan the trade, you plan your exit, you plan your entry, and you shut the chart. Do not look at that chart for the rest of this week. Yeah. Let the trade play out. The trade will do what it did in the strategy tester, and it will just hit the target or hit the stop loss. If you look at it here and it's been bear, 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 and then you look at it and for 1 hour there's a bull candle, you will close the trade there because there was a 1 hour bull candle. The 1 hour bull candle means that for that 1 hour, there were more buyers and sellers in the market. It's got nothing to do with the next direction of the price. Just telling you that, like this, look at the New Zealand dollar right now. Yeah, for 8 hours today, this thing's rallied. What's that got to do with the next 8 hours of price action? Nothing. Next 8 hours of price action will be determined by the level of buyers and sellers in the market. Got nothing to do with that 8 hours. Yeah. So if you're short on this from here, yeah, you scared the crap out of you there. You shouldn't have had this crap scared out of you. Right now, you're having the crap scared out of you again. When did you get out? There is no answer to that question. You get out when you're comfortable getting out, and you're always comfortable getting out with profit. What has this trade been in since you entered there? Profit all time. So you've had every single one of these candles has been an exit opportunity. Which one do you pick? Possible. The way it works, human psychology. You can't change it. This is why position trading works so well most of the time when it's not squeezing, because you adjust your price because you can't get it right. You can't get it right. And your psychology will always tell you to get out too soon. So change your price so that you can get out at a level that's going to make you profit more often than not. It's about winning more often than not about winning big. My DD control is set at 2% 33. That's the pain I can handle. Yeah. That's fine. Everybody's got a big different, you know, McKenna was just saying he's going to do the boot camp today. You're learning there that there is no right or wrong for drawdown control. There's no right or wrong for aggressive drawdown control. It's a personal thing. So the pain level of you and me is going to be different because I've got 5, 6, 7, 8 years worth of experience trading like this. My pain levels are going to be different to yours because I've sat through a lot more pain. Therefore, I know what the pain thresholds are. When you get in, first off, and you get to 1.5% in drawdown, immediate alarm bells go off because you've been taught that you shouldn't risk more than 0.5 to 1% on any trade. So immediately your pain levels are like, oh, panic. That's because you haven't adjusted to this way of trading. But that will change over time. So you will see, this is a great example right here on the chart. You will see many instances where you will do drawdown control just before payday. Yeah. And you will go, I lost 2.5% there to bank 1.5%. So I made a small loss on this trade. If I hadn't have done that drawdown control and I'd taken an extra 2% or 3% of drawdown, that would have been a beautiful trade. When that's happened to you 4 or 5 times, you will go, yeah, I can squeeze this a little bit further. But there has to be a point where you go, no more. Yeah. And at the moment, this market is as unpredictable as I've ever seen. So you have to be a little bit more aggressive with your drawdown control. Don't forget, your goal is capital preservation. Number 1. Yeah. Minimizing your losses. That's the key. Because if you haven't got any capital, you can't stay in the game. If I take a loss month after a loss month after a loss month, it means that I can continue to trade. Yeah. The good months are coming. Yeah. You always have good months. Good months follow usually bad months, because after a bad month, which has been a squeeze, you get a big unwinding. Look at our friend, the Aussie New Zealand. Yeah. Those of you that were in the live room here remember me saying at that point, just as annoying pop-up alerts. Come on. That is where we're headed. But I can't hold it anymore because I am at my limit. And I cut it. I said, it'll be down there in the next few weeks. Lo and behold, 5 weeks later, we're there. I knew it was coming because I've seen it 1,000 times. But you have to cut at some point. You've got to go, no more. Because I have also seen euro pounds just hit ADR. I've also seen the market go parabolic for much, much longer. So big move on the pound. No. Yes. We've also got money coming into the Swiss franc this morning. So there seems to be a safe haven run going on in the Swiss franc and the yen. So money coming into the Swissy as well today, as well as the yen. This pound pushing now a little bit more. US dollar not doing well either today. All over the place, isn't it? Right, that's all I've got for you this morning. So I'm back tomorrow at 2:15. We'll trade the New York Open. We'll look at FX again and see what's going on. But the big news tomorrow, obviously, we've got the unemployment rate in the morning, claimant count. Hopefully that doesn't come out positive. And then we've got the euro rate, which is the big one. So the euro rate, we're expecting the 4.25, but this is what we're going to be interested in. It's the ECB press conference. That's when Lagarde is going to lay out the forward guidance moving forward. So we're interested in what her plans are for August, which is the key thing, because that tells us whether or not the banks and institutions are going to start piling into shorts, or they're going to stay where they are, or possibly even go long. It's unlikely. But so we want to find out whether we're neutral or bearish euro moving forward. So we'll keep an eye on that one. We'll go through that tomorrow afternoon, because that will be, it'll probably be just finishing when I come on. So we'll see how Lagarde does over the next week, over the afternoon tomorrow, and then we'll see what the euro is going to do over the next couple of weeks. But we've had a decent push on it, so it's likely she'll probably want to calm the market down and take that back down again. So hopefully we'll get some guidance as to a rate cut to 4% in August. But at the moment, who knows? They're doing what they want when they want. Right, so I'll be back tomorrow afternoon, and yeah, I will be on at 2:15. So have a good day. Anything you need, I'll be in Telegram or Discord. Other than that, I will see you next time. Have a good one.